Walgreens is set to close around 25% of its stores across the United States.
In June 2024, Walgreens, the iconic pharmacy chain, made a shocking announcement. They plan to close a significant number of stores. At this point, only 75% of their locations are effectively contributing to revenues and profits. The company, which once seemed untouchable, is now rapidly reducing its footprint, with approximately 2,150 locations on the chopping block by 2027. This move is just the latest in a series of efforts by Walgreens to right a ship that's been struggling to stay afloat. With a revolving door of CEOs, stagnating profits, and a share price that plummeted over 55% between January and July 2024, the company is in dire straits. In their Q3 report, CEO Tim Wentworth pointed to two major challenges: pressure on consumers and tough trends in the pharmacy space. But time is running out for Walgreens to stabilize before it's too late. And Walgreens isn't alone. CVS has been closing stores for a while now, and Rite Aid is on the brink of bankruptcy.
Has been closing stores all along.
Rite Aid is filing for bankruptcy.
The question is, what's happening to American pharmacy chains? How did Walgreens go from record highs to a bottoming stock price in less than a decade? And what does all of this mean for you? To understand the headwinds facing these chains, we need to break down the store into two parts: front of store, retail, and back of store, pharmacy. Let's start with the front of the store, where everyone begins their visit. Walking into a Walgreens today feels a lot like walking into one years ago. The retail section hasn't really evolved. In fact, it's been on a downward slide, with a 4% year-over-year decline in Q3, a continuation of a rough few years for Walgreens' retail segment. The front-of-store offerings, where you'll find general merchandise and beauty products, just aren't that appealing.
Offer where the general merchandise is, the beauty products, isn't that good.
The brands are uninteresting, the prices are higher than at other retailers, and customers are left wondering why they should bother paying more. Every couple of years, Walgreens rolls out a new plan for the front end, but it's always some gimmick that quickly fades away. As inflation squeezes customers, chains like Walgreens struggle to compete with cheaper alternatives like dollar stores and big box retailers that offer larger selections and in-house pharmacies. Walgreens knows this is a problem. They've recently announced plans to lower prices on 1,300 front-of-store items, but it might be too little, too late. It's not just the economy that's changed, it's the way we shop. Amazon and Walmart have become better and faster, with competitive pricing and quick delivery options. Meanwhile, Walgreens is also grappling with shrinkage loss of merchandise due to theft or damage. CEO Tim Wentworth cited high theft locations as a key factor in deciding which stores to close. Locking up items behind glass to deter thieves might sound like a good idea, but it often drives away paying customers too. The more you lock away, the harder you make it for people to shop, and that's just more business for Amazon. Now let's talk about the back of the store, the pharmacy, which is Walgreens' largest source of income. In Q3 2024, pharmacy sales accounted for 76% of Walgreens' U.S. retail pharmacy revenue and 60% of the company's overall revenue. But even this crucial part of the business is under pressure. The rise of telehealth services and lower reimbursement rates from pharmacy benefit managers, PBMs, have significantly impacted Walgreens' bottom line. PBMs, which act as intermediaries between insurance companies and pharmacies, have grown in power. They negotiate drug prices, decide which drugs are covered, and set co-pays and reimbursement rates. But while they were meant to help control drug costs, the reality is that they often benefit when drug prices rise. This creates a misaligned incentive that puts pharmacies at a disadvantage, particularly as PBMs push patients toward generic drugs, which are harder for pharmacies to make money on. The three largest PBMs, CVS Caremark, Express Scripts, and United Health's Optum Rx, manage nearly 80% of all U.S. prescriptions. And yes, you heard that right. CVS, one of Walgreens' biggest competitors, owns its own PBM, Caremark, giving it an advantage Walgreens can't match. But there's a silver lining. The Federal Trade Commission recently announced plans to sue the nation's three largest PBMs, accusing them of illegally driving up drug prices. If successful, this could be a game changer for pharmacies.
We can shine a light on that, put pressure on that to make sure that everyone knows what they're paying for and why they're paying for it. And so at the end of the day, people can afford the medications that they need.
But what about the communities that rely on these pharmacies? When Walgreens or CVS closes a store, it can create what's known as a pharmacy desert, areas with low geographic access to pharmacies. According to the National Institutes of Health, approximately 15.8 million Americans live in pharmacy deserts, with the majority in urban areas. These closures disproportionately affect low-income neighborhoods where people are more likely to be on Medicare or Medicaid, which offer lower reimbursement rates. Both CVS and Walgreens have acknowledged the issue of pharmacy deserts and claim to be considering this when deciding which stores to close. But the reality on the ground tells a different story. Pharmacies in wealthier areas are often spared, while those in more vulnerable neighborhoods are at greater risk of shutting down. Pharmacies aren't just places to pick up prescriptions, they offer health clinics, COVID-19 testing, vaccines, and more. The closure of these locations doesn't just inconvenience customers. It adds to the burden of nearby pharmacies, where staff are already stretched thin. With pharmacists staging walkouts over insufficient staffing and corporate mandates, the situation is becoming increasingly dire. Unfortunately, the average American has little say in whether a pharmacy stays open or closed in their community. The solution lies in legislative action, particularly in regulating PBMs and potentially increasing reimbursement rates for pharmacies serving marginalized neighborhoods. The FTC lawsuit could be a step in the right direction, and some states are already moving to regulate PBMs more strictly. From a business perspective, closing low-performing stores might seem like a necessary solution for Walgreens and CVS. But the impact on communities is profound. And yet, there is a glimmer of hope. In the wake of these closures, independent pharmacies are seeing a resurgence. These mom-and-pop shops, once pushed out by the big chains, are now stepping in to fill the void, particularly in underserved areas. In places like New York City, less than 1% of the population now lives in a pharmacy desert. The closure of chain stores has created opportunities for entrepreneurs to start their own independent pharmacies, serving the communities that need them most. So, while Walgreens and other pharmacy giants struggle to adapt, the future of American pharmacies might just lie in the hands of small, independent businesses ready to step up where the big chains have failed. If you found this video helpful, don't forget to subscribe, hit the like button, and share your thoughts in the comments below. Your engagement means a lot to us.